Our own Seema Modi joins us here at Post 9 with a special guest in the sector. Seema, morning.
Sarah, thank you. Cummings CEO Jennifer Rumsey, welcome to CNBC.
Thank you. Good morning, Seema. Great to be here.
It's good to have you back at a time where we are trying to better understand what's happening in China. Latest data certainly not painting a positive picture on the outlook, but curious, with over 20% of revenue in that country, what are you seeing on the ground?
Yeah, so, we've seen strength in a lot of markets around the world coming off of record revenue in the first half. China, though, has really been a real exception for us. That market has been really depressed at the lowest level for us in many years. This year, we're seeing some improvement compared to last year where they had a lot of COVID lockdowns. So we're projecting the market to be up slightly for the year. And Cummings is positioned well with some new products that we've launched there. So for us, while the economy is slow, we're seeing some outgrowth in the market with new products that we've launched on the back of emissions regulations there. So we're projecting some slow recovery. We'll see if they do anything more substantial in terms of trying to stimulate the economy, but it is quite slow.
You're still planning, though, to launch new products. So you're not by any chance trying to reevaluate your position there, your footprint in China, look to other countries for growth?
Yeah, China is a big market, right? There's a lot of people that live there, and we see it as an opportunity for Cummings to be continue to be a big player. We've been there for decades,
right.
And we're continuing to look at how we grow through our Destination Zero strategy across the markets around the world. And by doing that, we're creating jobs and allowing the company to have strength here in the U.S.
Secretary Raimondo has been in China, and along with, prior to this, 3 other high-ranking officials from the U.S. Good dialogue, but not too many deliverables. What do you make of that?
Yeah, we'd like to see continued dialogue and finding common ground, working through the issues that exist between the countries, but also recognizing that there's a lot of interdependency between our economies. I talked about that for Cummings. It is a big market. It creates jobs for us here. And so we want to continue to see progress in that space in terms of the political environment.
As to where you're investing, $1 billion investments just in the U.S. Talk to us about the growth that you're seeing in this country, specifically in clean energy, as you try to make that a profitable business.
Yeah, so Cummings is serving commercial and industrial applications around the world. And we see an opportunity to grow even as our industry decarbonizes. So we're investing heavily in engine-based solutions. That $1 billion investment in our U.S. engine plants is for our next generation engine platforms. We call them fuel agnostic. So they will be best-in-class, high-efficiency diesel engines with fuel flexibility to allow our customers to start to move to these alternate technologies as they look to decarbonize.
And there's demand for that? Packard, Daimler, Volkswagen, these are the customers you serve.
Yeah, what we see is today customers across these different applications are trying to figure out how to meet sustainability goals, how to meet future regulations that demand improved CO2. And we're investing through Accelera by Cummings in zero emissions technologies. But those technologies today require a lot of infrastructure investment, and they're more expensive. So these bridge solutions, these engine-based solutions, are also important to our customers. We'll launch the natural gas version of those new platforms next year here in the U.S.
Okay. We're seeing a bit of a downturn in the trucking market, as you know, and you guys are all over this. What do you expect for 2024 in terms of production, given the industry and what we're seeing across freight, which is basically in recession?
Yeah, it's been a really interesting time, I would say, for our industry. We saw such strong use of those trucking products through the pandemic, and the reality was we could not meet our customer demand. We had supply constraints that paced production for the industry, so we've seen continued strength in the market, even with inflation and some of those softening indicators. We are projecting that we'll see some softening, though, in particular in the heavy-duty market here in the U.S. Aftermarket is starting to soften for us, and as we go into the second half of the year, we think we'll see some softening in heavy-duty. Medium-duty has remained strong, and so while we haven't given guidance yet for next year, we're expecting that our normal cyclicality may be a little bit softer than what would traditionally be seen.